Next up, I'd like to welcome to the stage Mr. Jeff Swinoga, President and CEO at Exploits. Jeff, stage is yours.
Well, great. Well, thanks very much for attending my presentation here. Honestly, a great turnout here. It's fantastic to be here in Quebec City again. Joanne, who runs the conference, well, with many help, she's a good friend. And again, great to see this conference getting bigger and better every single year. So I'm the CEO of Exploits Discovery. We actually have gone through a bit of a transition. Things are going extremely well for us, and I want to walk you through this story. This is super fresh. We just announced a couple properties that we've optioned in Quebec just 2 days ago. So for 4 years, we've been exploring in Newfoundland along this Appleton Fault with Newfound Gold. They came out with a resource of about 2 million ounces. And literally within about the last month, we've announced a option agreement for the Hawkins property in Ontario, which has over 300,000 ounces. And it's a historic resource, but we want to target to grow that to 1 million ounces. It's around a lot of major companies. I'll kind of walk you through that. And literally, as I mentioned a couple days ago, we also optioned another 3 properties actually in Quebec, Wilson, Fenton, and Benoit from Cartier Resources. A great company, but that company's been focused on their flagship property and less so focused on these other exploration properties. So combined, they have about 300,000 ounces as well. So we're super pleased. So right now, we've got an option agreement for about almost 700,000 ounces of gold in Ontario, Quebec, and Newfoundland. World-class jurisdictions, and we're very, very pleased. Eric Sprott owns about 14% of us. Right now, our market cap is about only 8 or 9 million. We've got about $4 million in cash, and a very experienced team. And we're looking to. I'll roll out some of the plans that we have for you. But just from a value proposition perspective, again, I mentioned a lot of these points already. But our shareholders are going to benefit from this exposure. Here we have a situation where gold has moved over 3,000, hopefully moving to 4,000, and we've now got option agreements for these gold ounces in the ground. So we're super pleased. And if you look at from a enterprise value situation, so $8 or $9 million in market cap, $4 million in cash, equates to only about $6 per ounce. So from a valuation perspective, looking at some of our peer group, that number is typically around $40 to $50. So we have a real opportunity to re-rate this company into a higher market capitalization. So our capital structure, as I mentioned, cash of 185 million shares outstanding, no warrants. We've raised money in the past. We haven't had to issue warrants, so that's very good. Some options, and shares are very liquid. We trade on the CSE and the OTC, about 500,000 shares per day. And actually, the last couple of days, our volumes have been quite high due to the announcements we've had. Again, Eric's a great supporter at 14%, and we have a lot of high net worth individuals and retail. The leadership team, my background, I've been in mining for about 27 years. I am getting older. I've been working for large companies like Barrick, Hudbay Minerals, Torex Gold, and so forth. Ken Tiley, a fantastic VPX that joined me a couple of years ago. He's used to running big teams, big budgets. He worked at McEwen before he joined us, and also worked at Corp and other companies. Shanna does our corporate development and IR. She worked at Abitibi Royalties before. She's doing a fantastic job. And Fiona's a great CFO. Our board, Doug Cater's our chair. He was the former VPX, Vice President of Exploration for Kirkland Lake, and he's looked at hundreds of different properties. And with the board's help, Siri does ESG, and Rod is a great economic geologist, and Larry's a wealth advisor. With the board and the management team, we've looked at probably over 100 different projects before we decided on looking at getting into these option agreements in Quebec and Ontario. So we've done a lot of work, a lot of due diligence, and we'll be rolling out plans how we're going to hopefully grow each of those resources. So let's start off with the Hawkins property. This geology is very similar to Hemlo. You can see Hemlo there, big, great historic mine in Ontario, produced over 20 million ounces of gold. Hawkins is very large. It's about 60 kilometers long. The resource that I mentioned of over 300,000 ounces, that's within only 1.5 kilometers. I like to think of that red part as a sirloin steak. So it's near Timmins. It's great jurisdiction, as I mentioned. It's been drilled in the past. The company that had this before spent probably about $10 million in exploration. So a lot of geophysical surveys. Also, this option deal came with $2.4 million of assessment credits. So all this property that we have, we don't really have to worry about doing some work on the fringes. We can actually focus on building ounces. Here's what it looks like underground. You can see, I forgot to mention that these ounces are near surface, so within about 200 meters. So that gray part that you're seeing, that's the resource, the inferred resource that I mentioned before. And what we've seen is our team has actually looked at where the opportunities are at depth. And you see the yellow shaded portions there. So there's lots of grade here. It's disseminated, which means that you see hits and then you have shoulder grade on the side of it. And what we're going to go after is the higher grade portions. We sat down with the resource estimators and actually walked through the model with them, found out where the trends could be. We haven't announced our drilling plans yet as to where exactly we're going to be drilling, but you can see there's lots of opportunity at depth to actually kind of build on that resource. A little history lesson on Hemlo. Hemlo sort of looked like Hawkins back in, say, 1980, 1981. It's only when they started drilling deeper that they found the higher grade, and that's what kind of made it sort of one of Canada's best historic gold mines. Also, another opportunity here is on the east side. They did some trenching in the past, hit some nice grades on surface, but they never drilled below. And the interesting part there is you see, so for some of the geophysical surveys, you can see there's the pink, sort of the ruby high mag, and then you get the low mag in blue. I wish I could zoom it up for you, but if you can see the trend line, so you have the resource on the left-hand side, and you see the trend that's on the right or the eastern side. That low mag area is where the contact points looks very interesting, and a couple short holes there. If we can actually get some more ounces to build out that resource, that would be fantastic. So the goal here is to add ounces either at depth, along strike, and actually look at this like a cookie cutter model. So again, this is only 1.5 kilometers of a 60-kilometer trend line. So if we can actually start applying this across and be successful, this could be fantastic for us and our shareholders. Looking at the Quebec properties, I'll go through each one of them just very briefly. So Fenton, Benoit, and Wilson, great jurisdiction, of course. I mean, great to talk about Quebec properties in Quebec City. These properties are about 2 hours north of Val-d'Or. There are some mills close by. The Windfall is also close by, a great project. The closest mill to these, we believe, is Bachelor Lake, which is about an hour away. So looking at Benoit, Benoit's got about 240,000 ounces historically. Really good grade and really good widths. It really hangs together well from a continuity perspective. You see the widths are like 4 or 5 meters, grades like 25, 30, 12. And we see a lot of opportunity at depth, and we see some opportunity along strike as well. I'm really focusing on the bottom right-hand portion of the cross-section, if that's what I'm referring to. And Wilson. Wilson, again, I'll refer to the bottom right. You can see it's almost like these golden pipes, if you will. So good grades, fairly good widths, and multiple opportunities along that trend line on that strike. Fenton, similar. Same thing. Look at the bottom right. You can see almost like these golden pipes or chutes that are going down. Very nice grades, very nice widths. And these both, I should mention, both Wilson and Fenton, they have a historic resource that's non-compliant because it hasn't brought up to today's standards. But it just shows how prospective these other two properties are. One thing I should mention, too, with this option agreement, we built in a lot of flexibility. So, for example, if we find out that Wilson is getting really a lot of success at Wilson, we can actually defer spending money on Benoit and Fenton, but yet still retain the whole package because we have to spend a certain amount to retain everything. So we can also drop one or two of these properties. If, say, Benoit is getting bigger and better, we could drop Fenton and Wilson, or we could keep all three and just keep spending the required amount. So we're super happy with the flexibility, super happy working with Karcher Resources. They've done a good job here, and we're just continuing the good work that they had historically. Newfoundland, still got great properties in Newfoundland along the Alpine Fault. The Alpine Fault is like a feather, you know, it sort of goes like this, and it's like the early days of the Abitibi. Newfound Gold has been the big exploration company there. They came out with 2 million ounces just recently. They want to do a PEA. We've got property. They're in blue. We're in gold or in yellow. So you can see we've got lots of property right near them. They've been drilling sort of close to our bullseye property, and then they've had good success at Dropkick and getting closer to our gazebo property. So we don't have a resource yet on our Newfoundland property, but we've had 2 gold zone successes so far. One called Horseshoe, one called Saddle on bullseye. So we're super pleased, and we're rooting for Newfound Gold to keep finding gold around our properties. Near-term catalysts. So the goal here is, this is so fresh. This just happened in the last couple of weeks, of course, these 2 option agreements. We need to do the necessary permitting. We've done a lot of due diligence on each of these properties already. But once the permitting's done, we want to get into drill plans. And then so the vision here is, the plan is to start drilling on both Ontario and Quebec in the fall. So we have multiple drill programs going, multiple news flow, and then we're keeping people informed. So we'll be doing some teaching, technical webinars on what we plan to do over the next month or so to kind of show people how the vision here is to grow each of these areas into 1 million ounces. And also, we do have some non-core assets that we're looking for joint venture partners. And we had this list of 100 projects we were looking at. And once you start a process, it's hard to stop it. So I'm not saying we're done, but we're really happy with what we have. But if another opportunity comes up, we might entertain it as well. So anyway, you guys are probably the first big audience I've presented to about this, so I'm super pleased that you're hearing this. And also, we're very happy that to announce, getting into almost 700,000 ounces of gold in a short period of time at a high gold price, all for the benefit of our shareholders. So thank you very much.